Hi guys, welcome back to another video, and today I'm going over the strategy that turned me profitable, as well as showing you an A plus setup that I look for every day in the markets. And with no further ado, let's hop into the charts. Here I am on TradingView, and at the moment we're on a pair called JPY, which is without a doubt my favourite pair to trade. It has the better results for my strategy. So what I basically look for every day is areas of supply and demand. So first of all, I'm looking for price to either be bullish, making price action like this, making higher highs, lower highs, higher highs and lower highs, or making bearish price action like this. And then that gives me a bias on the day, whether I should be looking for supplies or sells, demands or buys. So let's say I'm in a bullish scenario here. At these lows, this is where most amount of buying volume occurred. This is where investors were interested and they got in on price, and they've driven price to make highs like this. And at the bottom of each of these pullbacks, we have resting liquidity, stop orders, we have buying limit orders, we have lots of different orders happening around here. This is where a lot of people are interested in putting their stop loss just here. So what I'm looking at is for price to sweep this level like so, come down to lower prices at our area of demand and shoot off like this. So a lot of people in this scenario would have been thinking at this point here, when price was here, to get in, but they're wrong and they got in too early, and they didn't wait for the real move to occur at lower prices, because investors are always looking to get the best price they can in areas of discount. So it's very important when you're trading, you're always looking under the 0.5 fib level. So we can draw out our fib level like this, and we're always looking to be entering below this 0.5 level at all times. It's very important. There are so many videos online about discount and premium trading, and it's a big confluence for me in my trading as well. So we have supply and demand traders getting in here, we have resistance turning to support traders getting in here as well, thinking this is a good area to buy. There's loads of traders entering their trades, and they'll be putting their stop losses here, they'll be looking for buys here, all putting their stop losses below this low. So I'm waiting for a sweep of this low here, for price to wick into my zone. It can't close within, otherwise it makes the trade invalid. And then I'm looking for a bullish candle to wick in like this. This is sometimes known as a hammer candle, which has a nice bottom wick, and it's showing a lot of aggressive buying occurring in the market. So if we come down here, I'll show you what this looks like with candlesticks. And as you can see, we are pretty clearly bullish. We can see price here making this high, making this low, coming out to make this high, making this low. So we can see we are, we're very bullish here. So I'm definitely looking for buys in the market. So when prices at this point here, if I go into replay mode, prices at this point here, so I'm seeing this is where liquidity is being created, right? Like here, this is my area of liquidity, and this would be my demand zone. Because at this demand zone, we see a lot of buying pressure coming through. We have fair value gaps and imbalances, as some ICT traders call it. And when price comes on to make this high, then I know I'm not going to be looking at this zone anymore here, because there's no liquidity resting above it. I'm now looking at this zone here, and that is where my strategy comes into full force. So I mark out my liquidity, I wait for price to sweep it here. So let's see what happens. We see a fake out of buyers. This is really important. This is what you call a fake out. This is where people are getting in at this area of demand, or at this resistance zone to support, whatever. Lots of different traders getting in at this point here. We have people entering off fair value gaps. And you can see buying occurring. But this is a fake move. Because for me, this is not valid, as there's no resting liquidity here. Liquidity is all the way up here. It's not interesting to me. I'm looking at this area. This is the most discounted price that I'm interested in. So I wait for price to fake out all of these people here, and then I wait for this huge bullish candle. And whenever you see a bullish candle like this, there are a lot of buyers coming into the market. We have this bullish hammer engulfing candle. This is A++ in terms of candlesticks and reading candlesticks. And what would I be doing? I have a first TP at 1 to 3 always, at least 1 to 3. So this would be 1 to 3 right here. And I'll be looking for a second TP at some targets. But if I zoom out and go to the 4 hour time frame maybe, I may see that we have a key area around this price here. So I'll probably be aiming for somewhere around the 1 to 5, 1 to 6 level, like we have right here. And if we go back to the 30-minute time frame, so the time frame I trade on, let's see what happens. You can see price absolutely shoots off into the hemisphere. What will happen to price here? Oh. And there we go, goes on to hit our full TP. So this is an A+ setup for me. We have beautiful liquidity being created. We have a break of structure going on to confirm that we're bullish bias. You have a fake out at this area here, showing that there's more buyers entering the market here, getting stopped out, coming down to our price, wicking in with a bullish engulfing candle, and we enter off the close here and put a stop loss at the bottom of the wick, aiming for key areas in the market. So if we also, another confidence I use is using volume profile. And what I'll do here, so I draw out my volume profile, and I see that there is very, very low volume at the zone. This is something that I always look for in the market, and drawing out my areas of volume to show me where price could be reacting from. So we have this area here where price has obviously reacted from multiple times. It's reacted off this POC level, and what I'm looking for price to do is shoot through this POC, which is what happens in this case. And low volume at the zone basically means it acts like a fair value gap in a way, where price moves and reacts off these areas of low volumes. People call them low volume nodes, and either at low volume nodes we see price shooting through them, or reacting like it does in this case, which is always good to see. But yeah, that's basically it for the video. I hope you guys have learned something. If you have, consider subscribing and liking the video. We also have a free Discord in the link in my bio, and use code BEAMERFX for any challenges you buy at Alpha Capital or Alpha Futures. But yeah, I guess I'll see you in the next one.